The shipping industry has been at the center of almost every major market disruption in 2025, from trade wars and tariffs to geopolitical flashpoints and shifting supply chains. Freight rates have been volatile, trade routes have been redrawn, and uncertainty has become the defining feature of global logistics. As we head into 2026, the big question is whether this volatility is temporary or has it become the new normal. To help make sense of what happened in 2025 and what lies ahead for global shipping markets, I'm joined by Tom Beney, StoneX's Senior Vice President of Ocean Freight, who will also be speaking at our Agricultural and Industrial Market Outlook 2026 conference in Cartagena, Colombia. Morning to you, Tom, and welcome.
Morning, Joanna. Thanks for having me.
Of course. So let's begin with the big picture. Trade wars, especially all the new tariffs, really threw markets off balance last year. Would you say that 2025 was the moment we moved away from demand-driven cycles and started seeing volatility driven more by policy instead?
I think what's happened in 2025 is we're starting to get used to tariffs as a method of trade negotiation. And every time we see something which comes into the market, whether it's an additional tariff or a new regulation or a penalty on a different type of ship, then we have a reaction to that, and it makes the market very volatile. But I do think that the markets in general will always revert back to a fundamental analysis of supply and demand. But it takes a while, and we see shocks in the market. We see lots of volatility and lots of uncertainty as to how we deal with these, let's say, geopolitical events.
Yeah, and last year was a great example of that. I mean, we had one hit after another for China-US trade flows. First, we had April's tariffs, and we had a 90-day truce, and we had the Middle East tensions in the summer, port fees in October, then a quick reversal of that. It never stopped. In your view, how much of this is short-term turbulence and how much points to a deeper, longer-term shift in global supply chains?
Well, I think that right now the market's seeing it as short term, and a lot of that will depend on the political outcomes in the United States over the next year and a half. I think that overall we are, let's say, we're trying to figure out in global trade flows exactly what things are going to mean. Are we going to be able to rely on Iranian oil coming out? Are we going to rely on Russian oil coming out? Is the South America going to be able to cover the whole of China? As demand for beans, and therefore China doesn't need to come and negotiate for US beans. So there are a lot of different items right now which shipping companies are trying to deal with. One of the biggest items last year was the penalties on Chinese-built, owned and operated ships by the US, which were due to go into force in October last year. That threw the container market into disarray. Didn't know quite what was going to happen, and so that truce certainly helped calm everybody's nerves. But 12 months is a fairly short period of time, so people are starting to think, okay, how are we going to deal with this if it comes back? And again, the retaliatory penalties by China on US owned or controlled vessels will have quite an impact on the market if we see that again. So it's very difficult to plan ahead. I think what it does overall in the commodity markets is it means people don't take large positions. They go hand to mouth rather than trying to build up stocks or and that in effect has an impact in the demand overall for freight in the near term. And so I think what every business is looking for, but shipping particularly right now, is some kind of certainty so we can invest. Ships are high capital intensive goods, and large investments. A new VLCC, which is a large crude oil carrier, can cost in excess of $170 million today and has a lifespan of 15 to 20 years. How do you invest in that when you're not sure exactly, how the global S&D is going to play out with trade wars, tariffs, penalties, etc.? Alliances are changing, and therefore it's a very complicated jigsaw puzzle to try and put together today. But I think what is comforting is that during the times where there is no geopolitical influences, the supply and demand does come back and take over the overall direction of the market.
Okay, well, let's delve a little deeper into that. Obviously, we just touched briefly on geopolitical tensions earlier and in the last question, but I want to talk about geopolitical tensions in the Middle East, which were a constant backdrop in 2025. So even without major physical disruptions, why did those risks have such a big impact on freight markets?
Well, I think, for the crude oil market, the Straits of Hormuz, which is the small piece of water which goes between in the Gulf, the Middle East Gulf, where over 50% of the world's crude comes out of. So it has quite an impact overall when it comes to perception of where the next barrel of oil is going to come from if there is a problem in the Straits of Hormuz. And Iran threatening to close that has massive implications. And I think what we're seeing right now, the rising tensions in the Middle East and the US withdrawing personnel from Iran and asking people to leave Qatar, is a signal that people are getting very nervous again. The Straits of Hormuz is so important for crude oil that we could see a real change in oil trade flows again, and even to a point where the worry is that we may not have enough crude oil in the world if the Straits of Hormuz was to close on a longer term basis. But it's very unlikely. There's a lot of saber rattling that goes on, and there's enough military presence in that area to, I think, if there was a closure, it would be short term, but it's very unlikely there would be.
It's ongoing development, so we'll keep an eye on that. And Tom, something we also discussed in a previous interview is that despite all this disruption, scrapping has remained relatively low and new ships are still being delivered. Are we heading into an overcapacity problem this year?
I think it's a very good question. But the reality is that scrapping happens when, and I think I mentioned before, when the rates on ships goes below a certain level for an extended period of time. And it typically has to go below operating expenses on a vessel for, I would say, 3 to 6 months before people really say, okay, now I'm done, I'm scrapping my ship, because it's eating into their cash reserves. So right now, on pretty much all vessel classes, containers, tankers, dry bulk, gas carriers, etc., everyone's making money. So when that situation occurs, you don't get, let's say, a spike in scrapping. I think what's promising actually is if you look at the different vessel asset classes, there are quite a few of those classes where there are large, let's say, a rising portion of older ships. And so once scrapping occurs, it can happen very quickly. In previous years where we've seen in the dry bulk market rates go well below OPEX and stay there for 6 months, you can see a large amount of older ships go to scrap in a very quick period of time. So we call it the self-righting mechanism of the shipping industry. When that occurs, it tightens up a supply of tonnage, and we go back to a more reasonable, let's say, levels in the freight markets.
I see. And one last thing before we let you go. Looking ahead, what should shippers and commodity markets watch out for?
Well, I think what we're seeing right now is very high commodity prices around the world. You know, probably crude is the exception to that, but we're seeing high copper prices, high iron ore prices. We're seeing a lot of different commodities, alumina, high prices. So I think one of the major issues for commodity buyers and sellers is securing their supply and getting their ships in to be able to load that. And I
Hmm.
think the timing of that, quite honestly, is very difficult to predict when it comes to the market and buying the right freight rates in the market. So I think that what you're going to see in 2026 is more making sure that we secure our freight, people secure the right freight at the right time. Logistics are going to be important, and make sure that we're not doing running inventory levels at very just-in-time delivery. So there are reserves, and people can make sure that they've secured their supply, and that will include freight. And having a high-quality freight supplier is going to be extremely important in this market.
That's right. Understood. Tom, thank you so much for all your insights, and thank you to our viewers for watching. If you'd like more information about the Agricultural and Industrial Market Outlook 2026 conference in Cartagena, just scan the QR code or click the link below.